Hello and welcome back to Bonix Investment Group. In this video, we're going to talk about an 80% simple trading setup that utilizes the M15 timeframe. Very simple, but yet very powerful. All you need to do is to understand each and every concept that I'll divulge in this particular video. In this video, I'm going to lay a very simple trading setup which anyone can replicate no matter your trading experience, no matter the years that you have taken to trade. If you can repeat these steps for 13 to 18 trades, same rules, you can pass your prop firm challenge or even grow your small account to significant amounts. So all that you need is to be able to replicate over and over for at least 18 to 13 times these rules that I'm going to provide you. If you do so, you're definitely going to see a positive equity growth. So basically, we are going to start off with the market makers trend, which is going to be our friend. Trading successfully is all about getting in the market when a proper trend has been set. What is a proper trend? It is a trend that will be set by these guys who have actually injected a lot of lots on a particular contract. When they do so, the market will respond by actually a proper trend. So market trends are powerful because they are backed with huge capital. We always say market makers have access to large amounts of capital, and if they enter the market, they do not enter with 0.01 or 0.05 or 1 mini lot. They actually enter with thousands of standard lots. So this strategy utilizes the M15 to capture moments of the market makers trend. We want to be able to join in when these guys are already in the market. Below is a template that we are going to follow for the rest of the explanation. All right, so here we can see that this is a trend that has been shown. We are going to the upside, and we need to actually have several properties for us to determine that this trend is to the upside or to the downside. This is a range, and this is a W pattern. So what we are going to examine is how to determine a market maker's trend. When you are given any chart, how do you determine the market maker's trend? And then two, how to attain the entry setup and confirm its entry. When you do so, you are definitely going to get the edge that is required for you to repeat 13 to 18 times, as I mentioned earlier on. All right, so basically, to determine the M15 trend, we are going to require this. One, we are going to employ EMAs. For us to remove the subjectivity, we are going to require 50, 200, 800. If you have been following this channel for quite a long period of time, you'd know that we use these EMAs. So in this case, we have the 800, the 200, and the 50, right? So a trend is set when 50 crosses 200 above or below the 800. We're saying we have the 50 in blue and 200 in white. When they crossed, whilst they are below the 800, we are going to be looking for sales. When the 50, 200 cross is above on this side of the 800, we are going to be looking for buy setup. And the vice versa is actually true. So what we want is to see this first. We want to see a 50, 200 EMA crossing either below the 800 or above the 800. When that happens, we know which side of the market we are going to be looking for a pattern. So here is now the pattern. We can see that after the above condition has been met, we need to obtain an M or W pattern at the 200 EMA. So here is the 800. This is the 800, and we had a crossover of the 50 200 EMA on this particular move, and the market came back to the 200, gave us a W pattern for this particular big shoot to the upside. And what happened? We say the M or W pattern must be confirmed using the TDI, right? So the TDI gave us first leg outside the bands. You at least need to have the first leg outside the bands. That is your rule. So one of the pattern legs must be outside the bands. So in this particular case, this was outside the bands of the. So to understand this, we must now look at examples. But before we dive into examples, I want to personally invite you to join my one-on-one mentorship program. If you are serious about turning your trading into a powerful and sustainable source of income, this is for you. Use the link in the description box below, and I only take a few students on a first-come, first-served basis. All right, so here's the first example, and we can see that it's on US oil, and I've tried to take a current. This is 15 August 2025. And whilst still on that note, you may need to as well join our free Telegram channel where I share free signals, free trading advice, and so forth. So here we can see this is the 800 EMA. And on the 800 EMA, we can see that the market is right below. And what did we get? We got a crossover of the 50, 200 EMA like that. And after that crossover, we can see that the market came to the 200 EMA. And when it came to the 200 EMA here, we can see that this leg was right outside the bands. So we have satisfied below 800, 50, 200 EMA cross, and then the first leg right at 200 and outside the bands on the TDI, and they created a beautiful M pattern. At these particular levels, at the first leg level, that is where you want to get into the markets, and a 2-to-1 was actually going to be satisfied like this. So this was actually a clean example of the flow that we are talking about. This is another example now on gold. Since you can apply on any asset of your choice, all that you need is the patience for you to wait. You can see that we had actually first we had this particular 800, and we had a crossover below the 800 EMA on M15. And then after that, we can see the market going to the downside, gave us the first leg right at the 200, and it was outside the bands. First leg was outside the bands, created an M pattern, and market dropped like that, which was actually a good setup. Then here we can see another crossover was issued right below the 800, and we can see this being the first leg and this being the first leg level. Here we could see that we could have entered, or there were several retests. This happens, and I took this example for this particular reason, so that you may notice that sometimes the market makers does not give only two legs, but gives some sort of a consolidation. You can see several consolidation, then a page that was issued, and then the market went to the downside like that. But the satisfaction of first leg outside the bands at 200 EMA was issued, and this one as well. So basically, that is how you will be trading this particular setup, and you all need to repeat the same rules over and over again, no matter wins, no matter losses, just a repetition. On that note, we've come to the end of our today's video. Thank you for watching, and check out our free Telegram channel. I'll leave the link in the description box below, and see you on the next one.